Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, the PPI numbers came in, market liked it, they were a little soft. Are we getting deflation? Maybe not so fast. Let's dive in.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you have not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
All right, Bob, tell us all about PPI.
Yeah, it's kind of an interesting event. CPI came in a little soft, and then Powell came in and was a little bit hawkish. And so my thinking was, well, maybe the PPI, maybe he took a peek at the PPI and he's like, hey, not so fast. And then we got a bit of a whiff of deflation here because PPI went negative, and basically everything's kind of, slipping back down towards the zero bound here on pricing, at least from the government standpoint. I'm not going to get into whether it's real or not. And you juxtapose that against M2 increasing, and Janet Yellen actually today went ahead and did a T-bill fill. So she's starting to ramp up her T-bill stuff. So my thinking is I thought the market would really love it. Pre-market, it was up. After the market opened, we had, I think, digestion from the Fed meeting, and then we end up a little stronger. I think maybe this is the start here. I know we have some chop here, Phil, with OPEX next week, and then the quarterly expirations coming up, 2 weeks after that. But I think the market's going to seize on this, saying Fed's in control here, soft landing's happening, and time to ramp the markets. You want to you already have the PPI chart up. You want to just throw the M2 chart up again to show people just what it looks like. And guess what? And the way this M2, we have an M2 increasing at 5.5%, whatever the Fed funds rate is, Phil. I mean, this is like a brush fire is gonna rage out of control here, because what people don't realize about these cash that's being generated from these this higher interest rate is that it has to go somewhere, and it's not going into the economy. It's going to probably go into speculation.
Yeah, and the Fed isn't really trying to get the liquidity out of the system just yet. We're seeing, if they wanted to, there'd be more things they do to be more aggressive about their balance sheet roll off. And so we're not seeing that. As a result, with all the net effects of what makes up net liquidity, you are seeing a rise in M2. And I think Bitcoin's been lagging quite a bit on the markets. Even the miners are just saying, we're done waiting for you, right? The Bitcoin miners are taking off. But the most sensitive play to M2 is usually Bitcoin. So I think you're going to see quite a explosive move out of this consolidation when it does kick in. But the Fed, as much as they want to be hawkish, really hasn't shown us that they want to be that hawkish just yet. And I think at this point, more rhetoric than anything else, because I think they can see what we are seeing, and that is that under the hood, things are starting to slow down. So I think they're being accommodative without saying they're going to be accommodative, because the market will just take that and run. So they're trying to keep things lubed without outright saying, hey, we're going to be totally dovish here and the markets just go ballistic. And the reason for that is because you have to be so careful with the market and the algos now. They're just beholden to that, and it really shapes the way that they speak and what they say. So you have to kind of look past the rhetoric that you hear on the press conferences that come out with the announcement, the FOMC announcements and things like that, and really take a look at what they're doing. So without the aggressive balance sheet roll off, in fact, they've been dovish in that regard, right? Because they've actually said they were lightening the pace in which that they do that, which makes you wonder like why, right? But again, I think it's because they know that they're gonna have to deal with some tough times ahead at the end of the year. So M2, I think the deflationary story of PPI is going to be short-lived. I think we're going to see inflation, and it's going to be weird because we're going to see inflation tick up actually as the economy starts to roll over. It's more of a stagflation type environment, which is the worst of all worlds. If I was Jerome Powell, I wouldn't be sleeping well at night right now. But I think that as we get into that, I think we're positioned well enough that, write it up, then get defensive, and then watch the fireworks unfold. In terms of the next 4 years, I don't know who's going to be president, but it's not going to be a fun term in terms of the economy. They're going to be swimming upstream for the first half of their administration, and it's not going to be fun.
Yeah, and with Powell, it is a little bit scammy because, you screw Main Street by raising interest rates, you screw Wall Street by getting rid of the balance sheet, and they end up just screwing Main Street. They're hardly doing anything to the balance sheet. So we know they're not serious about it. The other fly in the ointment, Phil, with Bitcoin, which is going to be a good guy, is that Michael Saylor is going to have the ability to buy 18 days of mining supply up here with the $500 million. And so Larry Fink, you better be watching your short, because I guarantee you Michael Saylor said these knuckleheads are shorting this market, to steal Bitcoin. I'm going to go ahead and I'm going to make them pay dearly for it.
Right.
And, and he could do a lot of damage with $500 million into a purchase of Bitcoin, Phil.
Yeah, the futures positioning is at record short area. So the unwind on that, and they will unwind it if they have to. And I think that, and coupled with how, if you look at like the 5-day Bollinger Bands, I don't have that up. Last time we were this tight on the 5-day Bollinger Bands on Bitcoin was back when Bitcoin was $5.
Yeah, amazing.
So, and all of these moves, especially when you're finishing off a bullish leg in the cycle, as we are now, we're just consolidating in a bullish trend. Those volatility expansions are just wildly violent. So I think it's one of those things where we may wake up one morning and Bitcoin's up $4,000 and it's not going to give you a chance to get in. It's one of those times that you just have to kind of hold your nose and get long if you aren't already. And that's why it's hard now, because you kind of have to build a long position in a consolidation. And a lot of times you think like it's just never going to come. And that's usually when Bitcoin blows up. So I think we're getting close, and I think fireworks are going to be just spectacular over the next couple of months and all of this stuff.
Yeah, there's no way Bitcoin's going down with an M2 increasing. So this is this separates the great traders from the FOMOers, because, we can even see it in our room, people can't stomach one down day of anything. And it really, really screws with people's heads. This is where you have to lean into this and, take your profit on the way up if that's your ilk, but don't be selling out, because all you're doing is providing the cheap fuel for the smarter or the longer duration traders out there. So, Bitcoin is a high consolidation. We're seeing the same thing with the integrated oil companies. Oil's been up, 8%, in the month of June so far, and they've drove the integrateds down 10%. This is all a scam move to get you out of position, because they're positioning for the July to September ramp in these positions. So just keep the faith, and like I said, when we do the first, and that's the other thing too, Phil, I know we're rambling a little bit, but that's the other thing too. Jerome Powell knows the minute he lowers interest rates, it's over for the stock market. So they're gonna try to milk this thing as long as they can, because they know it's going to keep pushing the markets up higher. And everybody knows once he rolls that thing over, we're done for, because people are going to go into recessions here mode. They're going to roll hard into the bonds, and the stock market's going to take a hit, and people are going to get even angrier. So it's going to be really interesting to see. If he does it in September, then he's poking an eye at the administration. If he waits till after the election, then, they're all in it together. So with that, Phil, hey, I'll let you go. Tomorrow we'll have a couple more days here, tomorrow and Saturday, for some reports. But get ready, these next 2 weeks, if the market's not breaking out, I'm talking about the general market, not just SPY, is you start building your positions for potential 7% 2-month ramp in the markets.
100%. All right, guys, thanks for watching. Let us know your thoughts in the comments below. If you need help navigating these markets and want to get into the room with us, head over to tradegenius.co and check out our specials that we have over there. And we'll see you guys on the next video. Take care.
Trade Genius.